So now here we go. Don't forget debit side and the credit side, which is very important. Now the first one is, let's look at it. We have opening stock. It is not different from that of the sole trader account, which is the final account of the sole trader. We have purchases. Purchases is 65,340. Then we have a carriage inward. Which is 440. Let's add it together. We have 65,780. So you add it plus your opening stock, which is 10,000. You have 75,780. So that is a good available for sales. Then we have closing stocks. Our closing stock is 30,000 naira. So let's this to know the cost of goods that was sold at the end of the year. We have 45,780. Then let's go to the sales side, which is the credit side. You know, sales is revenue, is an income, and it has to be credited. So we have 75,250. Do you have a returning word? We do not have. So cost of goods sold. Now let's find the difference of sales and cost of goods. You know, sales, the total of sales is the cost of goods sold plus the profit. That will give you sales. So let's find the difference of sales from the cost of goods sold to know our gross profit at the end of the day. So our gross profit is 49,490. So that is 75,250 at the end of the day. Now, having done that, let us now prepare our profit and loss. We've done with the trading account. So we have gross profit brought down. Our gross profit brought down is 49,470. Now, side of expenses. Don't forget that we have additional information for the expenses and which have to be treated here. You know, I told you one is going to profit and loss, while one will be treated in the balance sheet. Now, let's start with the carriage inwards. Carriage inward, we have 160. Then don't forget we have additional information on salaries and wages. I think we've done the adjustment, and the total which we'll be going to profit and loss is 4,620. Then don't forget we have auditors remuneration. That means the fee, auditor fees. You know, auditor are the people who audit the financial statement of the company. So yeah, they will be given auditors remuneration. Then we have directors, the board of directors, and that's why you see this one is different from the sole trader account, because there are some information that will be included in this company final account. So we also have 4,250. Don't forget we have motor expenses. It's also an expenses. That is 780. We have a rate. That is 1,5,200. Then we have general expenses. Which is 480. Don't forget we adjusted for the debenture interest. Debenture interest is an expenses to the company on the loans. It's a long-time loan, and the interest has to be serviced. You use interest to service that debt. So debenture interest is an expenses, but we are also given another OE, which is added together with that of the balance sheet, trial balance. That is, then we have 1,100. look at your workings, you see it there. So we have 1,440. Now we have depreciation. We have provision. We have provision of motor vehicle and equipment. That one is given in the tribal, but depreciation for that year should be written off as expenses. So that of the additional information is what will be posted here and transferred to the balance sheet. We have motor vehicle, we have a 4,500. Sorry. Then we have equipment, which is 2,300. Now I haven't done that. I don't think we have any other expenses again. The remaining items will be posted to appropriation account. Now let's find our net profit. We don't have any other income, so that is 49,470. So let's add the total and let's find the difference of gross profit from total expenses. Then you see that we have 27,370 at the end of the day. So our net profit is 27,370. 27,370. Now, I haven't done that, and let me into something. You know, company has debentures and they also have shareholders. Before shareholders can be given the debenture, before they can be given dividend, they must first settle the interest of the debenture holder. That is very important. Before they can declare any dividend, they have to pay some expenses that they have incurred during the year, which debenture interest or any form of interest, it might be loan interest or debenture interest, have to be included, have to be paid first. Then after that, we have our net profit. Then we now want to, you know, it is a company. Now let us now distribute that net profit. That is what brings us to what we call appropriation account. We want to distribute this net profit to the shareholders. You know, shareholders are the owners of the company, and part of it will be reserved at the end of the day. So appropriation account, we have net profit. Net profit will be brought down, and that is 27,370. And don't forget, there is what we call profit, retained profit of that of last year, and that will be called profit brought forward. You know, part of the profit that was appropriated, which we call them retained earnings. The retained earnings of last year that have not been distributed have to be added to the new net profit of that year. It is what is we have to brought it forward so as to add it to know the total profit at the end of the day. So it is profit that is not distributed, and we call it retained earnings of last year has to be brought forward to the current year. So that is that. Then let us now distribute those profits to the reserves, then goodwill, preliminary expenses, and the dividend. And don't forget, company they are employees to pay what we call corporate tax, and that is a SITA. So that means company must pay. It is imposed on them by the government to pay 30% of the tax. So calculation must have been done there. The figure is given here. Now the first one is we'll go to general reserves. That means out of the profit, they will reserve part of it to fund anything that the company might want to embark on. So, and you know, we've done that. It has been given the additional information that the additional general reserves, it has not been made, provision has not been made on it, but you are just given another one that they should reserve 4,100 and not to be distributed from the net profit. So it will be added to that of general reserve that you already have, and you treat them in the balance sheet. Now we have a goodwill written off. We have goodwill written off of 15 we have goodwill written off of 1.5. And don't forget, goodwill is what has to do with reputable company. That means the value of the company is what we call goodwill. So out of the value of the company, which is an intangible asset, 1.5 we are told to write off 1.5 out of it. Then the remaining value will be 18,550. Now we have the preliminary expenses. Preliminary expenses. We are told that it should be written off. So, and that is in addition, you are given 3,210. Then ordinary dividend that was declared. Ordinary dividend. Don't forget, we have the interim and the final dividend. We are given interim dividend in the balance sheet. That means the one that is declared during the year, before the end of the year, and that one that was declared, which is final dividend, which is after the end of the year. You know, we discussed that in in our discussion. Then preference shareholders also ask they are entitled to dividend, which has been given in the additional information, and that is 2,100. You can see that we are distributing the net profit and the profit buffer to these expenses, the reserves and all other things. Then we have, don't forget, companies they are imposed by the government to pay 30% of tax, and that is